Today, we are diving into one of the biggest economic stories happening anywhere in the world, India's growth. We're going to break down a huge strategy report that explains exactly how India is on track to become the world's fastest growing major economy. So, let's get right into it.
This one number is at the heart of everything we're talking about today, 7.5%. That is the projected GDP growth for India. And, well, it's a figure that really makes you sit up and pay attention because of what it represents.
So what's the big deal with this number? Well, it means India is forecast to grow faster than every other major economy on the planet. For the next few minutes, we're going to use what's called an answer-first approach. We have the answer, 7.5%. Now comes the fun part, figuring out how we get there.
Okay, so first things first, let's zoom out and look at the big picture, the top-line numbers that are really setting the stage for this incredible forecast. You know, what's so fascinating here isn't just one of these numbers, but the story all three of them tell together. You see GDP growth kicking up to a steady 7.5%, but at the exact same time you see inflation cooling down, and the fiscal deficit, which is basically how much the government is borrowing, is actually shrinking. This is kind of the holy grail in economics. You're not just getting growth, you're getting stable, disciplined growth. So the question is, how on earth is that possible?
Well, that brings us to the bedrock of this whole forecast, because this kind of stability, it doesn't just happen by accident. It's something that's been years in the making.
And this right here, this is the key insight. The stability we just saw is the direct result of some really tough, deliberate policy decisions that were made over the last decade. It's all about creating a predictable economic environment where businesses actually feel confident enough to invest and to grow. The report points to three main pillars holding up this foundation. First, there's inflation targeting, which basically committed the central bank to keeping prices stable. Second, a simplified goods and services tax, or GST, which untangled a super complex tax system. And third, a massive overhaul of labor laws, taking 29 separate regulations and boiling them down into just 4 codes. Let's really zero in on that last one for a second, because its impact is huge.
So why is simplifying a bunch of labor laws so important? Well, it all comes down to this one concept: ease of doing business. I mean, just imagine trying to start a company when you have to navigate thousands of different rules. And a lot of them have criminal clauses if you mess up. It's a massive barrier to anyone wanting to invest or create jobs.
And this chart? It just lays the problem out there plain as day. A staggering 68%, more than 2/3 of all compliance rules with criminal penalties were tied to labor. Untangling this logjam, as they call it, is a total game changer. So, how does this new, simpler foundation start to translate into real-world action?
With that more stable foundation firmly in place, the stage is set for the next act in this story, a brand new cycle of investment.
This quote from the report really connects all the dots for us. You have these foundational reforms, and they create stability. That stability encourages investment in huge sectors like real estate. Then, that creates a ripple effect, right? It boosts demand for materials like steel and cement, which leads to more investment from those companies. It's a classic virtuous cycle.
Now, to really understand just how big a deal this new cycle is, you have to see where things were before. For a full decade, from 2012 to 2022, investment was a major drag on the economy, and the biggest drops came from two really key areas: people spending on new homes and companies spending on new machinery.
Okay, so that was then. Now look at this. This chart shows us that housing inventory, that's the number of months it would take to sell all the homes currently on the market, is now at a 15-year low. When inventory gets this tight, it's a powerful signal that the slump is over, and a new construction boom is just around the corner. That slowdown we saw in the last slide, this is its turning point.
So we have stability. We have a new investment cycle kicking into gear. But what does all of this mean for businesses and, their bottom line?
This right here. This might be one of the most important takeaways in the entire report. For over a decade, corporate profits in India actually grew slower than the overall economy. But looking forward, that's projected to do a complete 180. Corporate earnings are now expected to become a primary driver of economic growth, growing even faster than nominal GDP. That's just the economy's growth rate before you adjust for inflation.
And we can actually put a number on that comeback story. The report projects that the corporate profit to GDP ratio, which is a really key measure of corporate health, is expected to climb from a low of 3.5% back in 2015 all the way up to 5.5% by 2028. That is a huge swing, and it signals a major recovery in profitability.
All right, so let's bring all of these huge economic trends down to a more focused view. If you're an investor looking at all this, where might the opportunities be?
So where's the smart money flowing? The report's model portfolios overweight in sectors that plug right into this growth story we've been talking about. You've got financials, which will help fuel the new investment cycle, autos, benefiting from people having more money to spend, industrials, which will literally build all the new stuff, and of course IT services, which continues to be a global powerhouse. These are the areas that look poised to ride the wave of this 7.5% growth.
So, we end with this final thought. The foundation looks solid, the investment engine is restarting, and corporate profits are set to climb. The domestic story is undeniably powerful, but the biggest question mark still remains. In a world that's so interconnected and, let's face it, unpredictable, will that be enough? That is the test that lies ahead.